let's get to our next presentation here. Ladies and gentlemen, I see him backstage. He is from recruiter.com. It's ticker RCRT, and there he is. Evan Sohn, he's chair and CEO at Recruiter. How are you, sir?
Not bad, Brent. Thanks so much for having me.
No problem. And I am one of the news guys at Benzinga, and I see news all the time. And I did notice you had a couple news items this week, and I just wanted to take the advantage, congratulate you on the news items, and show off our Benzinga Pro platform, which I do spend a ton of time on. So I'm going to share my screen one more time, and we'll just highlight a couple of things that have been going on at Recruiter recently. So everyone can see that, right? So we have over on the right-hand side, that's called our details tool. You can find all kinds of good information about Recruiter. But I wanted to highlight, you had a couple days ago announced a deal with Deal. Congratulations on the deal. And then also today, stock is up a good clip here, about 20%. There was an analyst over at Maxim that initiated coverage on Recruiter with a buy rating and a $9 price target. Obviously, that price target is double the current price. So just kind of wanted to highlight that and give you a little old-fashioned congrats.
Thanks so much. Thanks so much. I'd love to say I'm surprised, but at some level, we've been at this for a while to really get us to where we are today, and it's an exciting time to be in anything related to the job market. And as the company is called Recruiter.com, we're really at the epicenter of really everything that's going on in the job market. So it's just an exciting time to be part of the reopening strategy for the country.
Love it.
Thank you.
Well, I am excited to hear a little bit more about Recruiter, and I see there are your slides. Take it away.
Thanks so much, Brent. And again, I want to thank everyone at Benzinga for their support. You've been a great partner for a bunch of months now. So our success is owed, or our recent success is owed as much to you as it is to other folks involved in the overall company itself. And again, thank you very much for having me. My name, little disclaimer there for everyone else. I'm Evan Sohn. Again, thanks for pronouncing my name properly, Brent, but we've spoken before. My background really is in high growth companies. I started my first company in 1989 in mobile computing. So I'm not a young guy. That company was acquired by Dun & Bradstreet in 98. And as you can see on the left side, bottom left side, I've been involved in a number of other exciting high growth companies from security, payments, and other industries. Also, on the other side of my life, I've been involved in raising lots of money for pediatric cancer. I remember my brother, Ira Sohn, which the Sohn Conference was founded by my brother's manager and friends and colleagues about 26 years ago. We've raised close to $100 million now on a global basis for pediatric cancer and other childhood diseases. Really excited. I've been CEO of Recruiter.com since June of 2020, became the chairman in March of 2019. And if you remember nothing else from this 20-minute presentation or 15 minutes plus some Q&A, it's really this slide. We really are what I call an incredibly undervalued company on NASDAQ. We actually got to NASDAQ July 1st of this year. So we are a startup company on NASDAQ. Though the URL has been around for a decade, the company really came together into a transactional engine really in the last 2.5 years. And as you could see on this chart, we are the purple line at the bottom of the chart. You could see that we're really trading far below this was really based on an enterprise value, far below our comps in the overall industry. And as Brent nicely mentioned this morning, Maxim just came out with a report this morning giving us a buy rating of $9. So even they looking at our overall price tag and really seeing us completely undervalued for what we are. And again, I think what's really exciting is Maxim really recognized that we're not a recruiting and staffing company, we're a technology company. And the reality is that companies, and if you hear and listen to the job reports, and we're part of that overall discussion, we'll talk about that in a few moments, companies all sizes need a different way to really the challenge of supply chain of candidates. And that's really what we're able to provide them without having to invest in lots of infrastructure and lots of tools, lots of people, lots of different software systems. We really combine this on-demand world for our clients. So we're an on-demand platform of both services and tools that deliver and help deliver candidates faster and smarter to companies of all sizes, no long-term contracts, able to scale up and scale down very, very quickly. And that's what we really provide. Our clients range from high growth companies that just raised money and they need a pipeline of candidates to very large multinational companies that have very exhaustive requiring hirements. But if I would ask you now, and we'll talk about some macro trends, everyone needs to be looking at their candidate pipeline, and companies are now recognizing just how hard this actually is. And we do this, and at the epicenter of all of this really is what we're seeing in this recruiting landscape is this great resignation. If anyone's seen me, I'm on CNBC once a month, usually the day before the jobs report. I do a couple other of those forums talking about the overall recruiter.com recruiter index. We started serving our recruiters right at the height of the pandemic. So 2 months ago, they actually had a 3.9 out of 5. And last at the beginning, what was it, last week? Actually, last week this time, right? So I was on around 120 last week, and we showed that the recruiter.com index went from 3.9 to 3.6. Our numbers were all tracking downward. And what do you know? The job numbers disappointed. And we understand there's a variety of reasons for that, but part of that is this great resignation that's actually happening, the shortage of hourly labor in terms of getting people back to work. There are lots of different forces that we're really all culminating with this golden age of recruiting. And that's really what we believe. But the reality is, when it comes to hiring candidates, this has really not changed in decades. And there's always been two ways to hire people. First of all, if anyone that's hired anyone has sort of gone through this process, you find a candidate, you engage the candidate, you screen the candidate, and then you hire the candidate. That's the process. All the AI and all the bots and all these other things, at the end of the day here, this is the process. We can automate different systems along the way, but this is the process. And then there are two ways to do it. You either did it yourself. So 30 years ago, you put a job on the classified ads of the New York Times, and today you put a job on ZipRecruiter and Indeed and LinkedIn. That's doing it yourself, and you're collecting the resumes, you're engaging the candidates, you're screening the candidates, and you're hiring the candidates, you're interviewing them, etc. Or you would retain a recruiter called a headhunter. Let's go get a headhunter. And the headhunter actually does the exact same thing. And the headhunter, you would pay anywhere from 20 to 30% of the salary. Now, that all made a lot of sense 30 years ago. It probably made sense 20 years ago. Might even made sense 10 years ago. But does that make sense today? Does it make sense to pay 20 to 30% of someone's salary? And again, I'm not talking about finding the chief executive officer of Coca-Cola. I'm talking about finding all the folks that actually work in the operations systems, the financial systems, et cetera. If I'm using a recruiter, does it really make sense to pay them 20 to 30% of a salary when the actual churn that's happening now is far less than it was, far greater than it was 30 years ago? So the tenure, right, the amount of time an employee will stay at a company is significantly less in 2021 than it was in 2001. And we've seen that across the board. And we've been talking about the job hopper economy. I gave a talk about that about 2 months ago, and that's really trends that are actually happening now. In fact, Kevin O'Leary, Mr. Wonderful himself, wrote an article about a month ago begging employees, please, please, please stay at your employer for at least 24 months. 24 months. Now, why is this happening? There was a survey that went out to millennials, and 60% of millennials had no problem leaving their job within 6 months. This is crazy. So this notion that our parents or grandparents told us you got to stay at your company for at least 4 years or 5 years, this is a new world. COVID actually just expedited this overall trend that was happening. And this is really, and all of a sudden now we really have this job hopper economy. So paying someone 30% of a salary who might not be there for 6 months or a year or 2 years just doesn't make sense anymore. So we are reinventing this platform for let's call it the post-COVID world. We started doing this about a year and a half ago. We have an on-demand software and on-demand services. So companies come to us. So if you're looking at our software, here's an awesome company called Agtonomy. It's a Silicon Valley high-flying company that's in the autonomous agriculture space. They raised a pile of dough. They needed to hire very specific folks in a very short period of time, but they wanted to do it themselves, but they didn't have time to go find the candidates in this sort of passive way. They licensed our software they're licensing our software, our AI software, which goes across 150 plus million profiles. I said that right, 150 million plus profiles, engages them and gets them interested in those roles, and those get passed over to Agtonomy, and that's our software. On the on-demand hiring services side, here's a company, Dentsu. They're the 5th largest advertising company on the planet. They had this massive hiring demand that came up post-vaccine that they had to really, really ramp up incredibly quickly. And we actually gave them around 18 on-demand recruiters that did 140 placements in record time. So no multi-year contracts. They're still a client of ours, but they could scale up and scale down at will. So think of us as Uber, but for the recruiting industry. So you need a recruiter. And again, think about Uber. You don't, if you need a driver, you don't want someone in San Jose with a little mini car. If you're a family and a family of 6 and you're going to the airport from New York, you want to have the right car at the right place at the right time with the right level of services. Recruiting and talent acquisition is the same thing. It's becoming a very, very, very specialized industry and specialized market. We actually expect it to get even more specialized. And what we're able to do is to leverage our network. And we have the largest community of recruiters and HR professionals on a global basis. And we're able to leverage our platform, dip into our platform, find the right recruiter or find a series of recruiters that make sense for that client. We give them to the client on an hourly or monthly basis. So no success fee. They actually augment their existing infrastructure to really provide them the services that they need. And when the project is over, they're either hiring those recruiters or they're transitioning them over to another project. We have a fully built out tech platform ranging from a career community marketplace. We have curated talent pools. We have video interviewing software. We have matching software, as well as our large database of profiles are really designed to help our on-demand recruiters and clients recruit talent better and faster. Very simplified pricing from sort of the ad hoc basic functionality of just posting a job like ZipRecruiter. We have a product called Amplify, which takes that job post and amplifies it using our AI tools across obviously the segmented audience, all the way up to large enterprises that pay thousands of dollars on a monthly basis for access to our platform, ranging from our community, our career community, job marketplaces, to our AI software, to our on-demand tools. And we obviously keep a fee that we're a platform like your gig platform. So we bill the client pays us, and we keep our percentage and pass the rest off to the actual recruiter itself. We're able to service really these different market segments, from the small business looking for less than 5 hires on a monthly basis, to mid-sized customers looking for, let's say, 10, to large customers looking for 50 plus hires on a regular basis. And our clients, and I'll show you a slide in a second, really have really grown significantly over the last 12 months. For recruiters, we're giving them access to incredible clients. Our clients are just amazing, top name brand clients. We put some names out in our filings as well. But these independent recruiters or these freelance recruiters would almost never have access to these types of clients. They also get hired quickly. They're looking for opportunities. We run a job board called jobs.recruiter.com. Where they can actually find opportunities, full-time, part-time, gig opportunities. They're using our platform as a gig, right? We have this 35% of all adults in the US have a side hustle. Guess what? Full-time recruiters working at companies now are using our platform to have gigs as talent acquisition professionals. And then we have a whole marketplace of third-party solutions that they can now avail themselves with, leveraging our platform. For clients, a global access to recruiters. So we have a client that says, gee, I need to hire folks in Singapore. We have recruiters in Singapore that will work on an on-demand basis to help that company scale up whatever candidates they need in the market, in the time zone, et cetera. Access to our AI platform, scaling projects up and down without any significant barriers. And again, being able to capitalize on our platform to find the right recruiter with the right skill set and the right experience. There's not one public company today that has what we have. So you've heard of Korn Ferry and Heidrick & Struggles. They do the executive level. We do not do the executive level. They're RPOs that really look at recruitment as an outsourcing function. So sort of like a call center. So they have lots and lots of full-time people that they place on different projects. Those are typically long-term, and we like them a lot. They're partners of ours in many instances. We really like them because we're a great source of recruiters for those companies, but they do not scale up and scale down on demand the way we do for our clients. Again, I know some of you, I could probably see the questions coming. Well, doesn't that what LinkedIn and ZipRecruiter does? And I hope you learned already. Those are really do-it-yourself platforms. In fact, the recruiters on our platform use tools like ZipRecruiter and LinkedIn in order to get their jobs done, plus our AI tools as well. And then there's a company called Eightfold, which is a Silicon Valley unicorn that, again, our AI platform with our AI search and engagement tools are really on par with Eightfold. It's not just me. We have a great management team, including the two founders of the company are still very involved in the company. Phenomenal CFO and Judy Crandall, Sohn Smith, who we announced in the last quarter, as well as Angela Copeland, who joined as CTO and as head of marketing, and then Josh McBride, an experienced entrepreneur, as heading up our sales team. mentioned that recruiter.com really was an advertising platform and really capitalized on this media asset to really build on it, turning into a transaction engine. We are a destination site for all things recruiting. So not only we're a source for job market data, for CNBC and others, but we actually generate organically now $4.4 million of traffic. So for those of you who are new to this, there's inorganic traffic, or paid traffic, traffic that you pay Google for, or organic traffic. Those are natural. You might have heard about search engine optimization, et cetera, but those are organic traffic that we get, free traffic that we get, and we get $4.4 million of free traffic every single month. Now, we do that because we run some of the largest groups on LinkedIn. We have 3 million social media touch points, 48,000 Twitter followers. We publish 3 to 4 articles a day. We are one of the primary sources of information for the recruiting industry. We publish newsletters and magazines, et cetera, and really are able to capitalize on this by driving lots of traffic. And so what we really spend our time doing is, how do we monetize this traffic better? How do we align the traffic that's coming to our site to ensure that we're delivering the right levels of services? And we've really become, in the last year, this voice of the recruiting industry. Mentioned CNBC before, Yahoo Finance, live podcasting, did a bunch of interviews with John Najarian. We've recently, really in the last 60 days, been in CNN, Wall Street Journal, and Business Insider as well. Some of our Q3 results, and I'll share the deck to anyone that's interested in them. I'd rather open up the floor for some questions. But we saw from Q2 to Q3 a sequential growth of over 40%. Our gross margins are increasing. The highest segments of our business are actually growing even further. Our software subscription business grew by over 150%. Our marketplace solutions grew by over 300%. So really just seeing really incredible growth across all the various areas. We now have over 300 companies subscribing to our platform. Really been an incredible quarter, and incredible growth of quarter. We are vectoring towards profitability. I come from a startup background, so very good at squeezing juice out of stones. Our average OPEX, as we're reporting here now, we gave this an earnings call, was around, on adjusted basis, about 1.3 million. So you could sort of see where we're going from a revenue side. We're going from a gross profit side, really inching our way towards profitability. The investments that we made following our NASDAQ round have really started to helping us with our over expansion that you can see now from Q2 to Q3. All the numbers really moving in the right direction. And I'll show you one other slide. This is obviously our sales growth, both in our on-demand business, our software business, really hitting that incredible growth curve in terms of really meeting the expectations that we set at the beginning of the year. At the beginning of the year, we gave guidance or expectations for about 25% sequential quarter-over-quarter growth, and we've been doing that quarter-over-quarter. On our product mix, so we really are a number of things. At the beginning of the year, we were very heavily weighted in the consulting and staffing space, and you could see here now that all the other services that we have really capitalized on our platform. And really, while the consulting side has really been deprioritized, all the other areas of the business have been growing significantly, and really, as Maxim said this morning, really transformed this year into a technology and staffing firm. And this is my favorite slide, and then I'll start with questions. Sorry, Brent.
Oh, good.
There are really 4 primary trends going on in the market today. And I think these 2 are really episodic. So this reopening of the economy, the 4 million people still out of work, this great resignation. I actually called that on CNBC. The great resignation is upon us. And a week later, 4.3 million people reportedly quit in August, not because I said it. They just did it in general. This job hopper economy. And what's really created out of all these things, and these are episodic, and this is really more systemic, is this incredible surge, and an absolute surge, as reported by the Wall Street Journal, in demand for recruiters. There are actually more open jobs on LinkedIn for recruiters and talent acquisition professionals than software engineers. Wall Street Journal, actually, I think it was last week, had an article called "The Hardest Job to Recruit For Was Recruiters." And here we are as recruiter.com, driving greater efficiency in our overall business, increasing our innovations in technology in order to really capitalize on our platform. We're doing annual subscriptions to help companies with this constant need of talent, and really being able to deliver on our mission to really recruit talent faster and better. So I think I did that pretty quickly, but thank you very much. I'm a fast talking New Yorker. But now we
Well,
can open up the floor for questions. Go ahead, Brent.
Well, I'm so glad that we got somebody from the jobs market on to talk today because, you just were hinting at right there, but we have some macro factors that are impacting the economy right now. Obviously, COVID, and we've all heard about the chip shortage, but I feel like right after that is the job shortage. And so, what do you like zooming out a little bit here? Evan, what do you think a solution is to the job shortage? Do you think it's something at the government level? And then, kind of the second part of that question is, which you've certainly been hinting at over your presentation, how does Recruiter help with that solution?
Yeah. So let's do the second then the first, right?
Sure.
So I think at the end of the day here, what's really happened, I'll do both at the same time. What's really happened is everyone is now more valuable than they were 2 years ago, right?
Certainly.
Every
Yeah.
person, every candidate is more valuable than they were 2 years ago. I said this like on Seeking Alpha like 2 months ago. That's the waiter willing to walk into a restaurant, right? The factory worker willing to walk into a factory, or a Java developer. Everybody today is more valuable than they were 2 years ago. Certainly the knowledge workers, et cetera. And part of the challenge now is that not only is everyone more available, but this notion of, and again, this doesn't work for restaurants or factory workers, but for knowledge workers, this geographically undesirable job also doesn't exist anymore.
Sure.
If I wanted to hire you, I don't care where you live, right?
Mhm.
If I actually want whatever skills you have, let's assume you have, these three skills that I want, there's no way I won't hire you. Just
Mhm.
because, what am I going to say? I need you to move. Who's going to do that anymore? No one's going
Right.
to say, I really want Brent, but you're going to have to move to this
Right.
location. So that all of a sudden now you have every job available to you. The second thing that's really changed in 3 years, let's make it 3 years or 2 years, is interviewing is now a piece of cake, right? Interviewing used to be you put on a suit, you got to leave the office, you got to
Yep.
come up with a story of why
Yep.
you're leaving. By the way, the expression to finding a job is a full-time job. We've all heard that expression. There's no way that expression will be written in 2022.
Sure.
Right? Finding a job is now easy. It's easy to find a job. I could apply online. I can interview from my desktop. I have an extra 2 hours a day because I'm not commuting. So what this really, and by the way, the last thing there is if I've removed now the stigma of leaving jobs, if there's no longer this stigma that, oh crap, I've been at 4 jobs in 10 years, right? If that's gone, all of a sudden now I could leave whenever I want. I could take a job wherever I want, and I can interview anytime I want. This is, oh my God, this is going to be this incredible churn of candidates. And what that really means is that companies need to really increase the overall throughput, right? So let's assume that to find a Brent 2 years ago, I would have to collect 50 resumes, screen 25 people, interview 10, make offers to 2 to get the one Brent I wanted. That process actually used to take 42 days. So in 2020, hiring
Wow.
a candidate took 42 days. You could find 4 jobs in 42 days right now. You
No
could
doubt.
interview for 40 jobs in 42 days.
Mhm.
So what a company now has to do is instead of looking at 50 people, I might need to look at 150 people or 200 people. So I need more and more throughput. I need a lot more at the top of the funnel, a lot more candidates. That's our AI tools, right? I
Sure.
need constant tools. Now, at the end of the day here, no matter what you see on a commercial, right? Recruiting is not being done by a bot, right? Recruiting is not being done by AI. At the end of the day here, you're a dishwasher in a restaurant or you're the CEO of a company, someone is talking to you before you walk into that business. Someone, right? There's no computer saying you're hired, please start on Tuesday, right? That's not a bot. Someone's going to talk to you. So the reality is that if you're going to start looking at 150 more people in order to have that throughput, I need people throughout that process in order to manage that overall process. I need an army. Now, do I need a full-time army, or do I want an on-demand army that could help me as a company scale up and scale down when I have these hiring demands? And that's what we do as a company. So
Sure.
the reality is that while we do that all, my advice to companies is to do the same thing. Whether you use us or not, you got to do
Mhm.
the same thing.
Good stuff, Evan. Love the story. Love hearing from you. Evan Sohn, he is chairman and CEO at recruiter.com. It's NASDAQ ticker RCRT. You have an excellent day, sir, and we'll see you soon.
Hey, thanks so much, Brent.